Selling in Slovakia? Here's what you need to know about Slovak VAT rules. Hi, I'm Richard Kupček, co-founder and CEO of Safari Star. In this video, we'll be looking at the key VAT requirements in Slovakia. When VAT was introduced, who needs to register, the standard rates, the registration process, and the risks of non-compliance. Slovakia introduced VAT in 1993 following the split from Czechoslovakia and the creation of the independent Slovak tax system. The standard VAT rate is 20%. A reduced rate of 10% applies to essentials such as food, books, and medicines. Exports and certain international services are subject to 0% VAT. All Slovak businesses must register if their taxable turnover exceeds 49,790 euros in the previous 12 months. EU businesses selling to Slovak consumers must register if they exceed the 10,000 euro EU-wide distance selling threshold. Non-EU businesses storing goods in Slovakia or selling directly to Slovak consumers must register immediately, as there is no threshold. When it comes to fiscal representation in Slovakia, non-EU businesses are required to appoint a fiscal representative. EU businesses are not required to, but may still appoint a local tax agent for compliance and communication with the Slovak tax office. To register for VAT, you will typically need the following: company incorporation documents, proof of your trading activity such as contracts, invoices, or marketplace listings, and the identification for your directors or your business owners. Registration is handled by the Slovak Tax Authority or the Financial Administration of the Slovak Republic and usually takes 2 to 4 weeks. Once approved, you will receive your Slovak VAT number. When it comes to compliances and filing, VAT returns are usually filed monthly. Businesses with an annual turnover under 100,000 euros may qualify for quarterly filing. An annual VAT return is also mandatory, and returns are submitted electronically through the Slovak Tax Authority's e-tax portal. Failure to register or late registration can result in backdated VAT liabilities, penalties, and interest. Fines can range from hundreds to thousands of euros depending on the severity. Persistent non-compliance may lead to stricter enforcement, including suspension of your VAT number. So to recap, Slovakia applies VAT at a standard rate of 20% with a reduced rate of 10%. Domestic businesses must register once they pass the 49,790 euro in turnover. EU sellers must follow the 10,000 distance selling threshold, and non-EU sellers must register immediately with a fiscal representative. Compliance requires monthly or quarterly VAT filings via the Slovak tax portal. Thank you for watching this video. If you found the content useful, let me know in the comments. Don't forget to like and subscribe for more updates on VAT and international compliance.